In today's video, I'll share a buy the dip setup inside of Lowe's. Lowe's is breaching key Fibonacci levels, and I'll share a specific buy side trigger that I'm looking at, which has backtested well over the past 5 years. Let's start first with Fibonacci levels, and then we'll move into the buy side entry. Before we even dive into Fibonacci, the obvious thing I want to point out is upcoming dividends, which is yet another reason why I think Lowe's looks interesting for a buy the dip setup here. The current dividend percentage is not much to write home about, 2.06%. However, I think the fact that there's an upcoming dividend, and if we can build this base here, really helps to give you a double punch on this overall setup. So that's the first thing I'll point out is the upcoming dividends. Now we move into the Fibonacci levels, and I have 3 Fibonacci levels that I've extrapolated. To draw these levels, I used the weekly time frame, and I used our Fibonacci Extensions tool. If you don't know how to use that tool, I'll leave a link to a video which walks through that in detail for the ThinkOrSwim platform. Now there's 3 swings that I compared from our current swing high to get a sense of what is the sell side personality in Lowe's and where can we expect to find some support. The first swing that I extrapolated was this larger swing right over here. This is at the beginning of 2022, end of 2021. That gives us a downside level closer to that 170 mark, 169.30, well away from where price is currently trading. 2 more realistic swings are these 2, 1 and 2. Now, extrapolating both of those swings, we get 2 price levels in which price is currently trading in between. You can see Lowe's penetrated the first one, 217.80, and it feels like we're making a move towards 207.14, which would also take out everyone with stops below these previous lows. That also happens to overlap nicely with this weekly 200 period simple moving average. So around this 210 mark, if you want a nice round number, looks very interesting inside of Lowe's for a level where I expect some buyers to step in and drive price action up higher, even if it is just for a little bit, very similar to this type of bounce right here. Now we move into the daily time frame where we need to pinpoint an exact trigger. I layered on some moving averages here, and what we have on our chart is the 8 EMA, then the 21, then the 34. These are all EMAs. And then we have the 50 SMA and the 200 SMA. Now, if you take a look at that 50 and the 200, you can see that we had the crossover right here where the 50 crossed above the 200. If you've been following our channel for some time, you might remember this video that I made about a year ago, 9 months ago. In this video, we compared the golden cross, which is the 50 SMA crossing above the 200 SMA, to the death cross. The death cross, using that as an entry, is where the 50 SMA actually crosses below the 200, and that's when you're looking to set up your buy side position. It's a little bit counterintuitive, but when we backtested it, we found that the death cross is actually a very useful entry signal. If we bring that back to our current conversation here, you can see that the 200 SMA feels like it's been building a base, and the 50 SMA feels like it's drifting down lower. If we do see this 50 SMA cross below the 200 SMA, I think that would be a perfect opportunity to apply the findings of this death cross versus golden cross and actually use that death cross as an example for a buy side entry here. We'd be looking at buying whenever that death cross happens. As long as, say, price action is even above the 200 mark, I think you still have a pretty good reason to be looking at this buy the dip inside of Lowe's. Now we can actually automate this entry so we don't have to just sit here, wait, and watch for this death cross. Instead, you might do something like this. I'll right click, I'll select buy. In the edit panel, I'll open up our settings icon, and inside of conditions, I'll click symbol, which autofills to Lowe's. Underneath method, I'll select order condition in the ThinkScript editor tab. And here, let's bring in our 2 SMAs. So I'll say def SMA 50, and this is the simple moving average, close 50. And we also have the 200 that we will need. So I'll say def SMA 200, simple moving average, close 200. Now what we can say here is if we have the 50 SMA cross below the 200 SMA, so crosses below, and we want to check this actually, let's say on the previous bar, So crosses below the 200 SMA, then trigger 1, else trigger 0. Let's see why this is not compiling. We forgot the if, so let's add in the if. And now what we have is a signal variable, which is essentially looking inside of ThinkOrSwim to say, hey, is the 50 SMA crossing below the 200 SMA? And we're checking that this has happened on the previous bar. The reason that is we know that this is finished printing or finished happening instead of those scenarios in which it might have flashed on and off, especially if the two lines are close to one another. Now, instead of using this crosses below, I like to spell it out manually. So the way we're going to do that is we'll say SMA 50 on the previous bar is less than SMA 200 on the previous bar, and SMA 50 on the bar prior to that was greater than or equal to SMA 200 on the bar prior as well. And that way, we don't need to use this crosses below, which I found sometimes tends to have glitches inside of ThinkOrSwim. This is a little bit more of a, I think, foolproof approach to doing that. Of course, if this is your first time with any automated trading scripts, try it in paper money first. And even when you choose your quantity, even if it's a seasoned script or whatnot, always start with a relatively low quantity that you don't mind starting with first. And then you can use that to build into a larger position. So just like that, we can now link this limit to say the bid price on the next day. You might even add in an offset since this is low. So let's say maybe minus 50 cents just to try and get a slightly better price than even the bid price. We'll say bid minus 50 cents. Time in force will be GTC. I'll click, and actually one additional criteria that we can add is the price needs to be greater than 200. So we can say if this cross below happens and, whoops, right up here, and we'll say the low price from that previous bar is greater than, actually, yeah, let's say low price on that previous bar is greater than 199.85. Let's do that. Give it a little bit of room, and now we can just let this order work. And now ThinkOrSwim is automatically going to wait, monitor, watch this position. As long as we're above that 199.85 mark, if we see this death cross, ThinkOrSwim will then use that as an excuse to get us into 5 shares, in which we'll join the bid minus whatever 50 cents is from the bid price at that time. And that's how we can, quote unquote, try and get a slightly better entry than whatever that current price might be, especially market pricing. I hope you found this video useful in not only finding a trade, in this case lows, but learning how to go from trade idea, in this case a swing trading idea, to actually placing some sort of a starting automated trading order using 2 very simple moving averages. Take care, everyone. Good luck trading, and I'll see you in our next update.